Good morning. Another burst of heavy selling pummeled software stocks and crypto on Thursday, with weak US jobs data exacerbating an equity rout spurred by concerns over the impact of artificial intelligence on valuations. Alphabet was the latest to drop after earnings. Bitcoin took one of its biggest tumbles yet, with silver plunging around 14% at one stage as the US dollar firmed. At the close of trade, the Dow Jones index fell by 593 points or 1.2%. The S&P 500 index slipped 84 points or 1.2%, and the tech-heavy Nasdaq index shed 364 points or 1.6%. The 30-stock Dow was down nearly 700 points or about 1.4% at session lows, while the broad S&P 500 and Nasdaq dropped 1.5% and 1.9% respectively, as the AI theme came under renewed pressure after Alphabet's spending plans and Qualcomm's downbeat forecast rattled investors. Shares of Alphabet eventually fell 0.5% after the Google parent said it would double its capital expenditure this year, signalling another aggressive push to strengthen its position in the AI race. Alphabet beat on both its earnings and revenue for the fourth quarter. However, it also projected a huge increase in capital expenditure for 2026 to between 175 and 185 billion US dollars, more than doubling its 2025 spending. Chipmaker Qualcomm sank 8.5% after forecasting second quarter revenue and profit below estimates because of a global memory shortage. The downward pressure spread across tech megacaps, with Microsoft and Tesla down 5% and 2.2%. Amazon shares plunged more than 10% in extended trading on Thursday after the company posted mixed fourth quarter earnings and boosted its full year spending forecast to 200 billion US dollars as it aggressively invests in data centers and other AI infrastructure to meet a surge in artificial intelligence demand. The S&P 500 software and services index slid 3.2%, chalking up a seventh straight session in the red and wiping out about 830 billion US dollars in market value since January 28. Software and data services stocks such as ServiceNow and Salesforce were down 5.5% and 4.8% respectively. The materials sector was the worst performer on the S&P 500 index, down 2.8%. Silver and gold resumed to slide, with the white metal plunging around 14% after rebounding in the last couple of days from a sharp drop. The stronger US dollar weighed on the commodity complex. Gold miner Newmont plunged 7.1%, while lithium producer Albemarle slumped 7.2%, and copper miner Freeport-McMoRan was down 4.3%. Elsewhere, the sell-off in the cryptocurrency market continued to gain steam, losing $2 trillion US dollars in market value since October as Bitcoin fell below 64,000 US dollars, its weakest since October 2024. Bitcoin has fallen amid weakening risk sentiment driven in part by volatility in precious metals and a broad sell-off in tech shares. Crypto stock Strategy lost 17.1%, while Coinbase shed 13.3% and Robinhood Markets fell 9.9%. On the earnings front, Estee Lauder shares fell 19.2% to the bottom of the S&P 500 index as the Clinique owner forecast annual results below estimates. Tapestry rose 10.2% after raising its annual profit forecast, while Hershey added 9% on a better than expected annual profit forecast. Overall, consumer staples and utilities, both defensive sectors, were the only two of the index's 11 sectors trading in the green on Thursday. US government bond yields fell on Thursday as weak US labour market data and a deepening slump in stocks bolstered wages that the US Federal Reserve will resume cutting interest rates this year. The move came as data showed a surge in job cut announcements by US companies, a jump in claims for unemployment benefits, and a slide in job openings. US job openings unexpectedly fell in December to the lowest level since 2020, and layoffs edged up, adding to evidence of sluggish demand for workers. Available positions decreased to 6.54 million from a downwardly revised 6.93 million reading in November, according to the Bureau of Labour Statistics data out on Thursday. The pullback in openings was driven by professional and business services as well as retail trade. The rise in layoffs reflected more cuts in transportation and warehousing. US-based employers announced 108,435 job cuts in January, an increase of 118% from the 49,795 cuts announced in the same month last year. It is up 205% from the 35,553 job cuts announced in December, according to a report released on Thursday from global outplacement and executive coaching firm Challenger Gray and Christmas. Applications for US unemployment benefits rose by more than forecast last week when severe winter weather gripped much of the United States. Initial claims increased by 22,000 230,000 to 231,000 in the final week of January, according to Labor Department data released on Thursday. Claims exceeded all estimates in a Bloomberg survey of economists. Short-term interest rate contracts that predict Fed rate moves priced in higher odds that the central bank, which paused cutting rates this month, citing signs of labour market stability, will act again by July. The US 10-year Treasury yield fell by 9 points to 4.19%, and the US 2-year Treasury yield slid 10 points to 3.46%. European share markets finished lower on Thursday, with all major bourses in negative territory. Glencore shares dropped 7% and Rio Tinto's London-listed shares fell 2.6% after the latter said it was no longer in talks with Glencore about a takeover that would have created the world's largest mining company. Rio said it could not reach an agreement that would deliver value to its shareholders. European mining stocks fell 3.4%, with Aurobis down 2.9% after Europe's largest copper producer reported quarterly operating core profit below estimates. The European Central Bank held interest rates at 2% as expected and reinforced market bets that policy will remain steady for some time. Inflation is in a good place, said ECB President Christine Lagarde. The Bank of England kept interest rates on hold at 3.75%, but only after an unexpectedly narrow 5-4 vote, and said borrowing costs are likely to fall if an expected drop soon in inflation is sustained. The continent-wide FTSE Euro First 300 index slipped 1%. In London, the UK FTSE 100 index lost 0.9%. On commodity markets, global oil prices slipped almost 3% on Thursday after the US and Iran agreed to hold talks in Oman on Friday, easing concerns around any bottlenecks in Iranian crude supplies. The Brent crude price fell by 2.7% to $67.55 a barrel, and the US NYMEX crude price also shed 2.8% to $63.29 a barrel. Gold futures settled $61.30 or 1.2% lower at $4,889.50 an ounce on Thursday, as a stronger US dollar and a broad market rout prompted investors to liquidate precious metal holdings. Spot silver slumped at one stage by 17% to $72.64 an ounce. Copper futures slipped 0.5% as rising inventories and a stronger US dollar weighed on prices. Iron ore futures were down 1.1% to $101.03 a tonne, as high inventories that underscored steady blast furnace production left little room for price hikes in China. Australian shares are poised to fall sharply at the open on Friday, in line with extended losses in New York. According to latest SPI futures, the ASX 200 index is expected to open the day down by 98 points or 1.1%, held back by weaker commodity prices. In Australia on Friday, Reserve Bank Governor Michelle Bullock appears before the House of Representatives Standing Committee on Economics at 9:30am Australian Eastern Daylight Time. In local company news, earnings results are expected from News Corp, REA Group and Charter Hall Retail REIT. In the US, consumer sentiment likely edged lower at the beginning of February after it edged higher in January, with consumers citing elevated prices and concerns about a softening labour market. On Wall Street, sportswear maker Under Armour is expected to post a slump in third quarter revenue on Friday as challenging consumer spending and cost-tighter tariffs weigh on its performance. The US dollar hit a nearly 2-week high on Thursday as fresh volatility gripped stocks. The Aussie dollar dipped from 69.89 US cents to session lows near 69.35 US cents at the US close. For further developments on today's local trading session, please tune into the CommSec Market Update podcast this afternoon. Thanks for tuning in. Have a great day and a wonderful weekend.